AECI has reported softer earnings at the halfway mark. In the 6 months to end June, headline earnings per share declined 57%. That's due to lower profitability and an elevated tax rate. Given the performance, the Chemicals and Explosives Group has decided to not declare a dividend. Looking ahead, AECI says its underlying businesses remain strong, and so it has a positive outlook for the full year. Shaftesbury CEO Ian Hawksworth says he is pleased with the group's performance. For the half year, the Central London Mixed-Use Real Estate Investment Trust has reported a 38% rise in profit. That's thanks to improved conditions across the West End's occupational and investment markets. An interim cash dividend of 1.7 pence per share has been declared. Consumers have become more cash conscious in these tough economic times, and this has weighed on Woolworths. The retailer has forecast a fall in annual headline earnings per share from continuing operations of as much as 19%. The firm says while disruption to business operations in South Africa caused by load shedding and congestion at the ports eased in its last quarter, shoppers continue to feel the pinch of high living costs and elevated interest rates. Similarly, in Australia and New Zealand, Woolworths noted low consumer sentiment that weighed on footfall and discretionary spend. The group will release its annual results on the 4th of September. Altron is eyeing a profit bump. The IT service management company says half-year headline earnings per share are expected to be at least 20% higher. That's as the positive momentum it experienced in the second half of its 2024 financial year continued into the current reporting period. That largely hinged on the successful execution of profit improvement strategies. Further detail on the group's financial position will be released when the company opens its books on the 4th of November. MTN Nigeria has reported a solid operational performance during its first half, but its financial performance hasn't been as stellar. At the halfway stage, the mobile operator has posted a loss after tax of 519 billion naira. That's from a restated loss of 85 billion naira. The widening is largely due to a weakening of the local currency, which pushed up net forex losses. This outshone gains such as increases in both total subscribers and data users and a 32% rise in service revenue. Nigeria is MTN's largest market. Further afield, Lufthansa is warning of a fall in third quarter earnings. This comes as the German Airlines Group grappled with higher wage costs and a squeeze on ticket prices. Let's take a look at this report for more.
Lufthansa gave investors a bumpy ride Wednesday. It reported a group net result of around $507 million for the second quarter, down almost half on the same period last year. The German airline also warned of a fall in third quarter earnings as it struggles with higher wage costs and a squeeze on ticket prices. It blamed challenges at its main brand passenger business, Lufthansa Airlines. Airfares around Europe and Asia have started to flatten out or fall as a post-COVID travel boom loses steam just as airlines ramp up flights. Rivals Ryanair and Air France-KLM both reported plunging profits earlier this month, although EasyJet did better. Lufthansa chief executive Carsten Spohr said demand had remained strong, but he warned market-wide capacity growth intensified price pressures for airlines, causing yields to fall. Delays in aircraft deliveries have hit fleet management and driven up repair costs for older planes. Lufthansa also saw wages rise for German staff after strikes that cost the group $108 million in the second quarter. Shares in Lufthansa were little changed after the update, but the stock is down almost a quarter over the last 6 months.
On the macroeconomic front, Eurozone inflation rose to 2.6% in July, exceeding expectations and casting doubt on potential ECB interest rate cuts in September. Here's more detail on the print in this package report.
Eurozone inflation edged up unexpectedly in July. Wednesday's data showed how price growth in the 20 countries sharing the euro sped up 2.6% in July, slightly up from June. A key measure of underlying growth in prices, which excludes energy, food, alcohol and tobacco, failed to show the expected decline and came in unchanged at 2.9%. Wednesday's data didn't end market expectations for an interest rate cut by the European Central Bank in September, as they expect inflation to eventually ease. But it did strengthen concerns about a difficult final effort for the ECB to bring down inflation. Eurozone inflation has fallen a long way since hitting double digits in late 2022. Progress has stalled in recent months as prices in the services sector got a boost from higher salaries. In a small positive sign for the ECB, services price growth eased very slightly to 4% in June. The central bank started cutting rates last month. Over the next year or so, it's expected to slowly further cut some of the steepest hikes it has ever made.
And monetary policy has been under the spotlight this week. We've had traders across the globe on edge ahead of the big central bank's moves. Here's our reporter Darling Lechela with more insight on this. Darling.
That's right, Zinati. The Bank of Japan, Fed and the Bank of England all giving a temperature reading of their economies. And joining me now for more on what these central bankers' decisions could mean for those economies is Deutsche Welle's Cassandra Sint. Cassandra, thanks so much for joining us today. Now, let's start with the BOJ. A surprise hike coming through from that side, right?
Thanks for having me. Well, it's been a historic year for the Bank of Japan, which hiked interest rates for only the second time in 17 years. The second rates rise today follows a rates rise in March that was a huge shift from a long-running campaign of negative interest rates. These moves are essentially designed to try to kickstart the Japanese economy, which has been sputtering lately. The decision puts interest rates, which used to be below zero, up to 0.25%.
And a number of traders expect the Fed to leave rates unchanged. What are you hearing from your side?
Well, unlike the Bank of Japan, the Federal Reserve in the U.S. has had a much more aggressive strategy when it comes to rates. Rates have held steady in the current 5.25 to 5.5 range for about a year now. The Fed meeting started yesterday, and it's possible but not expected that Chairman Jerome Powell will announce a rates cut today. What's more likely at the moment is that Powell and the other decision makers will see the next few months as their finale, so to speak, in the fight against inflation, which government officials like to see closer to 2%, as opposed to the near double digits that many countries in Europe and North America have seen in recent years. And here in Europe, the Bank of England is also considering a rates cut. There have been encouraging signs in the UK when it comes to inflationary pressure letting up. Traders in swaps markets are placing the probability of around 60% that the BOE will lower rates from their 16-year high of 5.25%.
Now, central banks' decisions out of the way, we've also had data out from Germany surprising markets, that economy not faring well. Just unpack that print for us.
Yeah, that's right. The German economy unexpectedly shrank in the second quarter, according to new economic data out yesterday. It shows that the German economy is falling further behind as economic recoveries take hold elsewhere across the Eurozone. The figures show that the economy shrank by 0.1%. That's in about face from the expansion of 0.2% that Germany saw in the first quarter of this year. And it was a shock to analysts who had forecasted a slight economic increase in the second quarter of this year. The comparison to other Eurozone heavyweights was really stark on Tuesday when the French economy revealed a positive surprise that their economy rose more than expected in the second quarter. Spain also beat forecasts, growing 0.8%.
Thanks for those insights. Let's leave it there. That was Cassandra Sint joining us from Berlin. It's back to Zinati now with your markets update.